What's going on, preppers? What is going on, preppers? Economic prepper here. Hope you guys are doing very well today. It's been a couple days since I've been on here. Allergies have been really getting to me, and I've been reading the comments previously and taking a lot of you guys' advice. So I just want to thank you guys so much for the helpful tidbits of information, not to mention many of the natural remedies that you guys have provided to me. Big things are happening here, and I had some concerns, and I wanted to kind of share them with you guys. Many people are fearing what is to come. We talked about this before. The worst is actually yet to come, according to many economists. And a very big move happened today, and I want to talk to you guys a little bit about this, as well as some additional preparation measures that I want to kind of just discuss with the community. So one of the big moves that happened today was Jerome Powell. Many of you guys know Jerome Powell is the Fed Reserve Chairman. And today, May 4th, it says here that the Fed interest rates have been raised again, but this time even more aggressively than what we have seen in the past. Today, the Fed interest rates have been raised by 0.5%. I don't know if you guys can see that. Got my laptop out here. Fed interest rates have been raised by 0.5%, which is the largest move since 2000. Now, let me share this article with you, and there's something I want to touch on that no one else seems to be talking about right now. And I'd love to get you guys' feedback on this, because this is something big, and it's affecting all of our pockets, and it's affecting the future. It's affecting mortgage rates. It's affecting housing prices, housing values. It's going to affect you if you're renting. No one will escape what is coming here. Now, it says here that the Federal Reserve on Wednesday, which is today is Wednesday, the 4th of May, the Federal Reserve raised short-term interest rates by 0.5% as a part of an effort to tamp down the inflationary pressures weighing on Americans. Now, keep in mind, guys, the Federal Reserve, Jerome Powell, who was the Fed Reserve Chairman, just raised interest rates about a month ago. Let's see, this is May, April. No, I think it was March. So here we are again. Getting a phone call in the middle of my video here. Let's call that person back. Actually, it was my wife. I hope she's not mad at me when she sees this video go up in a minute. Sorry, sweetie. All right. Central bank suggested that it will further raise borrowing costs throughout this year as it attempts to undo its panic era easy money policies. Now, they're talking about the entire the CARES package, all the different stimulus packages and stimulus checks that had rolled out since the pandemic started, not to mention the PPP loans. You had EIDL loans, you had a number of different monetary related policies, you had mortgage forbearance. There were trillions of dollars that were essentially just printed within a period of 2 years, adding to the nation's deficit, which is affecting our inflation, which is affecting food prices at the grocery store, which is affecting vehicle prices. I mean, if you can even get a new vehicle. I mean, you got chip shortages hampering the production of new cars, whether it's a gas vehicle, it's a diesel vehicle, and an EV or electric vehicle. The chip shortages are affecting everything, and it's causing everything to go up in price. And of course, you know, who's bearing the burden of this? Of these drastic price increases? It's the everyday American here. So it says here, the central bank suggested that it will further raise borrowing costs throughout this year as it attempts to undo its pandemic era easy money policies. The policy setting Federal Open Market Committee also details plans on unwinding its nearly $9 trillion balance sheet. It goes on to say that the decision to raise interest rates by 0.5% marked the most aggressive increase made in a single meeting since May of 2000. Over the last 2 decades, the Fed has opted to raise interest rates only in increments of quarter point, 0.25%, with the latest move underscoring the severity that inflation poses at the moment. Quote, and this is a direct quote here, according to the FOMC, the committee is highly attentive of inflation risks. The Fed, and it's about to get worse, you guys, the Fed is now targeting interest rates in a range of between 0.75% and 1%. Now, this is far more aggressive than we've heard from the Fed in the past. We were hearing, okay, there's going to be 6-7 rate hikes in the year of 2022 coming from the Fed, and we were hearing interest rates at 0.25%. So inflation is way worse now than what we're being told. Why would we start off getting warnings from the Fed at the end of last year and even going into the beginning of 2022 saying that, okay, as the Fed, they're letting us know that they're planning to increase interest rates in increments of 0.25%. They also said that they're planning to do maybe 6 or 7 rate hikes throughout the year. Now, I want you guys to just think back for a minute. How many times did we hear from the Fed that inflation was going to be transitory? Oh, this is just going to be temporary. Now, of course, transitory could be interpreted in a number of different ways. I mean, technically, the human life is transitory. We're not here forever. So technically, if the average age is, say, 75 years old, life is transitory. So I guess technically, as long as it's not permanent, it could be transitory. So what most people took transitory from the Fed in terms of its meaning was that this is just going to be a very temporary state. Inflation's only going to be here for a short period of time. Well, I guess that ambiguous description of how long we would be facing high degrees and potentially hyperinflation, it was never specified with clarity to say, hey, we're going to be in these high inflationary environments for a specific period of time. So I guess technically transitory could mean anything, as long as it's not forever, right? So if it was 200 years, if it ended at some point in time, technically inflation was transitory. Now, here's the scary thing. I want you guys to pay very, very close attention to the wording and what's being said and what's not being said. We were told that inflation was under control. We were told that, and we were told that, the Fed didn't need to do anything. Jerome Powell had everything under control. But all of a sudden now, we got this rate hike of 25.25% in March. And if you had noticed, the level of aggression coming out of the Fed has been so much more aggressive than we have seen in the past. When you start off with a 0.25% rate hike, right? And then you go to a 0.5% rate hike 2 months later, and then all of a sudden, for the first time, we are now seeing that the Fed is now targeting interest rates in the range of 0.75 and 1%, with some Fed officials advocating to raise the target closer to 2.5% by the end of the year. Now, this is big, guys. This is really big. So I'm starting to wonder if can the Fed get a hold of this inflation, or is it out of their control? It almost seems like the Fed is panicking at this point. I want to hear from you guys. Now, we were in the grocery store just the other day. Wife picked up some groceries. Actually, I didn't go with her that day. This day, she went and picked up eggs, and the eggs were $50. The eggs were $50 in, I forget if it was Costco or Sam's Club, but the eggs were $50, and we had never ever seen eggs cost this much. Now, granted, this is a larger quantity of eggs. I want to say maybe something like 5 or 6, maybe 7 dozen eggs. I don't know the exact quantity, but just to give you some perspective, because we bought this from the wholesale store, either Costco or Sam's Club. But at the lowest, we would see the eggs at $12. Sometimes it might peak up to, $15, $20 for the eggs, depending upon the season. If it's near Easter, generally, there's going to be more people buying eggs for, egg painting or egg, decoration and Easter egg hunts and all that kind of stuff. But today, like this week, $50 for eggs. I have never, ever seen anything. I've never seen them cost that much before. Now, granted, not only is it inflation, but millions of eggs, millions of chickens have been killed in the past month or so, euthanized, hens, due to the H5N1 bird flu that's going on. So there's a lot going on, guys. I don't want anyone to panic, but I want everyone to know what the heck is going on. Now, here's what I wanted to bring up that no one else seems to be talking about. Mortgage rates. Now, whether you're a renter, whether you're looking to buy, maybe you're looking to maybe you're looking to move from one rental to another. Whether if you live in a home, if you live in some form of shelter, unless you live in a tent, you will be affected by this. Now, I want you guys to think about this for a second. Back in end of the summer toward the fall of 2021, so 8 months ago, you could have secured a mortgage rate without paying any points. You could have gotten a mortgage rate somewhere around 2.8 to 2.9% for a 30-year fixed rate mortgage. Now, fast forward 6 months, Fed Reserve Chair Jerome Powell raises interest rates, or at least notifies us that the Federal Reserve will be raising interest rates by 0.25%. Now, this is the rate that banks are charging each other. Banks charge each other. When banks borrow money from the Fed to issue us mortgages, to issue us car loans, to issue lines of credit against your house, to issue lines of credit for your credit cards, when credit is issued, the Fed interest rate is the basis for which these financial institutions charge us the interest rates that we pay. Now, I want you guys to pay very, very close attention. 6 months ago, you could have gotten an interest rate for your mortgage, 30-year fixed rate mortgage of 2.8, maybe 2.9%. Heck, let's just call it 3%. The Fed raises interest rates by 0.25%, and then all of a sudden, within a matter of 3 or 4 weeks, interest rates are suddenly 4.25, 4.3%. They're jumping so much faster. The mortgage rates are jumping so much faster, more aggressively than the rate that the interest rates are changing from the Fed. Now, I want you guys to pay very, very close attention. Today, if you were to apply for a mortgage with 740 plus credit score, you would likely be looking at an interest rate right now, fixed rate interest rate of over 5%. Many people are now considering ARMs, also known as adjustable rate mortgages, for the simple fact that they cannot afford to pay for a fixed rate interest rate of 5%, 5% plus. And today, tomorrow, we're going to look at 5% as a deal. Next month, 6 months from now, we're going to look back at today and say, man, I wish I would have locked that interest rate at 5% when it was a deal, because guess what? The Fed's raising interest rates today. The news just hit the wire. The news just hit the wire. So if you're not prepared, I mean, preppers are preparing. Preppers are preparing. The wealthy are preparing. My brother's got a house on the market right now for sale. This market is unbelievable. And I don't know if all real estate markets are like this, but I was reading an article that in 2021, 25% of homes that were purchased with all cash. That's a big percentage of purchases coming in at all cash. Well, 2022, we're only 5 months in. Recent articles said that 30% of mortgages, 30% of home purchases are being made by all cash buyers. Number one, all cash buyers are not necessarily impacted to the extent that anyone who needs a mortgage is going to be impacted. They're paying cash. It's almost like interest rates are completely irrelevant to them. Well, my brother, because everyone's saying that the housing market's going to crash, and whether it ends up crashing or not, that remains to be seen. Home developers are still developing, and homes are being listed and put under contract at record rates, at record speeds, I should say. I don't want to say record rates. It's a little confusing. So my brother's house sat on the market for roughly 24 to 48 hours before accepting an all-cash offer. And Not only was it an all-cash offer, but it was significantly above the ask price, and the house was listed at market price. I'm just going to leave it there. I'm going to leave it there. I want to know what you guys are thinking. Like I said, banks are getting over. Banks are getting over. The Fed raises interest rates by 0.25%, but yet our mortgage rates jump up by 1.5% to 2%. That's like mortgage rates increasing 8 times faster than the Fed rates increasing its rate. Anyway, guys, I just want to share this information with you guys. I hope that you guys are preparing out there. I hope that you and your families are doing well. If you've made it this far into the channel, I should have asked for this earlier, but if you made it this far on the channel, do your boy a favor, give me a big like give me a like on the video. Also, consider subscribing to the channel. I'm going to bring you guys more information, more preparation, more prepper content, more economic preparation content. It's time for the little guy to get some wins. We need to prepare, and there's a lot more coming down the pipeline that they're not sharing with us, and I want to keep my community up to speed. So if you could think of anyone who can benefit from content like this, please do me a favor, share this video. I look forward to hearing from you guys in the next one. Take care and be safe, you guys.